just to make sure Facebook doesn't kick us out.
Yeah,
All right.
you gotta please the masters.
So we are live. We are live on Facebook, LinkedIn, and YouTube. No technical issues other than my video seems to be flickering a little bit. And oh well, we'll figure that one out until next time. So all right, let's get started. Good morning, friends, and thank you so much for joining us today. For those of you who are returning to see us, thank you so much for your support. Welcome back. And for those of you who are joining us for the first time, thank you for joining, and put a thumbs up or some kind of a hello in the chat so we know you are new. And thank you for your support again. And I want to encourage you to please subscribe to our YouTube channel or our Facebook page or our LinkedIn pages so you'll always get the alerts when we go live, which is, by the way, every Thursday, 10 a.m. Eastern on all of Facebook, LinkedIn, and YouTube, as I mentioned. So with the exception of, just to give you a heads up, for the week of Thanksgiving, we'll be going live on Tuesday, the 23rd. That would be the only exception. All right, just to introduce myself, my name is Torossian. I'm a certified public accountant and a chartered global management accountant. I'm an experienced auditor and a CFO. And currently my engagements, help me, well, the way I introduce myself usually is a CPA advisor and transformation coach for entrepreneurs, small and mid-sized business owners. I've authored a couple of books. I have a short ebook called The Business Owner's Guide to Operational Accounting, and I've put the link below so you can download it. It's free. I've also written a second book, which is called The Complete Guide to Business Growth, and you can find that on Kindle. And the link is also in the chat. A new thing I've worked on is a framework that I'm using to help visit my clients that are at $1 million to get them to 10 million. It's called Valuation MT, which is going to be copyrighted soon. So it's a very unique process that I'll be talking about at my next Network and Learn event. If you are in Miami and you have $1 million business, please join me. It's going to be in Coral Gables, and the link is also in the chat. Today with me is my friend and my colleague and the person that does all the taxes for my clients, and I don't know what I would do without him for the tax side of things. And that would be Pedro Gonzalez, CPA. Pedro, great having you here today.
Good morning, Marie, and good morning, everybody. Pedro Gonzalez, CPA, business and tax strategist. Our goal is to help our clients improve their cash flow, lower their taxes, and develop a beautiful exit strategies that will meet your expectations. I have a link in there for a free ebook, the Real Estate Investor Tax Strategy Guide. I'm also working on another one that will get published in the area of tax planning and tax strategy. So once that is ready, I will invite you to go and look at that one. And again, the point is how to maximize your tax deductions and take advantage of tax strategy. Most of them get overlooked and missed by most taxpayers.
Yes, absolutely. And then, as just to give a heads up on some of the things we've talked about in the past. And for example, last week we talked about self-employment, and then both on the employee, self-employed person, the individual, and then the person that's hiring them as contractors. So that was a great subject we talked about last week. And so whoever wants to check out that one, please go back to, I believe, episode number 5. So last week, and you can get that there. So today's conversation is going to be about tax planning. There's like this massive confusion about what tax planning is, and to make that clarification done, Pedro is going to walk us through why is it important, what is the general process, just so our audience gets a feel for it. And we're going to start tapping into some of the key areas. I don't think we'll have the time to do it all today, which is great because you guys can come back next week to listen to the rest. So Pedro, could you kind of give us in general, why is it so important, and how is tax planning so different than tax filing?
Right, so that's a very, very good question, because there's, I would say, a lot of confusion, and some people wonder, why should I pay for tax planning? So I hope by the today conversation, you gain a better clarification of the value behind tax planning. Taxes can make or break, could be a what we call a make or break factor when it comes to investments, business deals, and retirement decisions. Really, tax reduction, it begins with tax planning. That's where you're gonna find the tax saving. And as I mentioned before, taxes erodes wealth. If you do nothing, you are overpaying taxes. And I was mentioning, Marie, that and unfortunately I don't have the link right now, but there was a study done just recently that close to $1 billion is in overpaid taxes. That's the average American that does not take advantage of taxes, tax advantages that are provided to you and I, but they're not taking advantage of them. It is not the IRS responsibility to let you know, hey, Marie, you missed this deduction. It is up to you and I to go and seek this information that is buried in thousands and thousands of pages, to extract this information and apply it to your tax return. Now, what is the difference between tax planning and tax preparation? Because that's a good question, that you brought up, Marie, and it is a huge difference. Tax planning is definitely not tax preparation. Some people assume that, let's say you pay XYZ tax preparer, and that in that process, he or she is doing a tax plan for me. And that's not the case. Tax planning is not tax preparation. It is a completely different mindset when we're doing planning versus preparation. Tax preparation is simply preparing the return. In essence, it's a compliance process. It's just preparing it and sending it to the IRS. You have a set of information, and then that information is going to go into a form, and we have to make sure that, yes, we captured the information that is declared or being declared to the IRS, that either be interest, dividends, your W-2s, all of the sources of income are going into this form, and that certain deductions are available to you.
Right.
That's it. That's a preparation. Now, tax planning is the practice of using effective strategies. It's a strategy process. You're sitting down to delay or avoid taxes. By taking advantage of provisions that is available by tax law to the benefit of the taxpayer. So it's there. We just have to be able to extract it and then determine which one of those apply to you. And so we find ways to accumulate wealth and speed up, for example, tax credits and tax deduction. What we call tax credit harvesting, because there is tax credits available that are available to most individuals. The thing is that they get, again, missed.
Right. Tax
credits is a powerful tool. The wealthy uses those tax credits consistently. And the reason being that, tax deduction is something you hear a lot. And I'm sure that you go through Google right now, and they're going to be telling you the tips are the greatest tips to lower your taxes. And you're going to see a lot of them are going to be talking about tax deductions. Nothing wrong with that. But you can see that there's a big difference, and this is part of the tax planning process, is that there's also something called tax credit. Tax credit is a dollar for dollar reduction on your tax liability. So a $500 tax credit is a $500 reduction in your tax liability.
Right.
The tax deduction, if you, let's say, accumulate $1,000 of tax deduction, you bring those tax deductions to your preparer, that's $1,000. You do not get $1,000 reduction. It's going to be based on, let's say, what bracket, or you hear the word bracket. Right. So let's say that you're on the 20, I don't know, it doesn't matter, 20%. So that $1,000 reduce your tax liability by $200, not by $1,000, but by
Right.
So you see the difference. Why is it that it's important? Not only, yes, it's important to still maximize your deductions, but there's tax credits. And there's another study done that about 70% of taxpayers do not use tax credit that are actually, they're entitled to use it. It's available, but they're not using it. 70%. So
that's a big number.
It is a big number. And that's why, again, you and I had this conversation before going online. That's why I feel so confident about the tax planning, our tax planning process, and
Yes.
how we can help. And when I tell them, listen, we even give you the money back because I know that there's going to be tax deductions in there. I mean, tax reductions for you because the majority
Absolutely.
of people are not taking it. So again, the tax planning is about strategies to delay and to
Hmm.
avoid taxes legally. I mean, when again, another confusion when people hear tax, avoiding tax is
Right.
not illegal.
Yes, I know. There's a lot of incorrectly, there, credits and whatever stuff done very incorrectly in a creative way. And I've seen some,
Right.
for example, uh, I saw a tax return from a client, and I was reviewing to see if we would take on the client. And one of the things I noticed was, they had a Schedule C for a business. So I asked the client. I said, well, do you still have this business? Where's the business information so that I can review, the financial records? And the person said, well, we don't have a business. I said, well, your tax return says you do.
Right.
So there was this massive fear in this poor person's soul, I would say. And at that point, I said, look, you really have to go back to who did your taxes, because I'm not taking it right now. I do not want to deal with this.
Yeah.
Go back and have it fixed, because someone became very creative, someone who doesn't know how to do tax planning correctly.
Right.
And they became very creative and put some expenses on this person's Schedule C, pretending they are part owner, which they were not, and passed it through. And the IRS hadn't caught it yet. It would only be a matter of time. So there's a wrong way of doing it, and there's a right way of doing it. So we're doing it the right way, taking our time, going through a process, going through all the different checklists of what is available, what is doable, and when do we do it. So with that, why don't I open the conversation about the process that we would follow, from, let's say, the initial meeting through implementation. If you can walk us through it.
Yeah, the process, can be broken down to very, again, kind of a global view of this is,
Sure.
first is the diagnosis of the situation. I mean, just to be able to sit down with the individual and diagnose the kind of where are you at this moment.
Right.
Gathering information about your current situation, what are your goals, and then be able then from that point then becomes in essence the study process. Now we have a diagnosis about the current situation. We understand in general about your goals, where you want to be. If you're here now, where you want to be. And then we start doing the studies. I mean, about, like I mentioned before, about maximization of the tax deductions, utilizing harvesting tax credit for this individual that we know, based now that we understand your business or businesses, we can understand that you have some tax credits here that you can use. And what other strategies utilizing that, either tax deferral plans, utilizing even insurances. And this is something that we can discuss maybe later. But again, there's tools out there that can be used. Sometimes they're vilified because they say, well, this, for example, like the use of life insurance and tax planning, and a lot of people do not understand them, and they don't see the value from an investment standpoint.
Right.
You try to compare that to, let's say, your mutual fund performance. Maybe the life insurance is not performing, but the life insurance provides you something that the mutual fund is not going to provide you. Again, we're trying is to determine what are the tools available to achieve the goal. You know what I mean? I tell people it's like the guy that buys a McLaren and then says, well, it doesn't. Somebody says, hey, your car doesn't perform well gas wise. True, but I didn't buy the McLaren because of the gas efficiency. I bought it because
the purpose.
A different goal in my life. When I bought this car, was for a specific purpose. So when we're using life insurance, we're using it for a specific purpose in the global, again, spectrum of what we're trying to do of not only asset protection, but some other strategies that can go behind this in the process of utilization of resources that are not going to be taxable. So this is, again, so we go from the diagnosis, we start doing the study, and then goes implementation. So kind of, I guess, the 3 points of, again, summarizing it, that would be the process.
Yeah.
Why is not something that is just a couple punch of buttons, and that's why it's not, there's not a cookie cutter process. Like you just say,
Exactly.
well, I did Marie's, and Marie's I'm going to apply to Joe. It doesn't work that way. That's why it takes time if you want it done correctly. You know what I mean? That's why when people approach us and say, hey, so what do you think? I don't know. I don't know if this will help you. The only way is diagnosing your situation, understanding your goals. Then I can say, well, yes, this type of investment, this type of tool that you Googled, and you Google this and say, oh, yes, I can do this. Is it going to work for me, Marie? I don't know. We don't know how and what exactly you're trying to accomplish in your life.
Exactly. And then one of the key things I think most people miss is that, if you're a single individual in the age group of, let's say, 40 or plus, and then you have a business, the business is doing $1 million or more, you're in a very different kind of a consideration we got to look at versus a person that has a wife or let's say a husband, or a person that has children. And so it just varies. If the person is at an older age bracket where they have a business they want to exit. And so those are all different pieces that need to be considered before we even come up with a plan of what it is supposed to be. So I think it's very important for people to understand that there's no, like you said, no cookie cutter. There's no such thing as like there's one process and everybody follows the same. I mean, in general, there's key points as to like how we meet initially, how we gather information, the documents or financial data that we need to gather, certain considerations we have to make, set priority list, and then maybe implement. But that's very high level process. But each individual's specific tax planning strategies are going to differ based on where they are in their life stage. And then, of course, tax planning is not a one-time event. It's something that is continuous, that, again, most people miss out on this. Again, because it's tied into the life stages, what you had planned from, let's say, from today that would take care of things, let's say, for the next year or two, maybe 3 years, in about 2 years, you want to start planning what tax changes happen, what is life changes happen, what do we need to make adjustments on. So it's not a one time and you're done. It's just, life is changing, taxes are changing, rules are changing. So therefore, tax planning is a continuous process, just like tax preparation and filing.
Correct. You're right. I mean, that's another good point about the tax planning. I agree. It's not a one-time event. Just like we have discussed also in the past about business planning. Whenever you do the planning process, you go ahead and, again, diagnose, you do your research, and you implement. Now, another event happening in the process, and this is notorious of the tax area, is it is dynamic. It changes. Right. And so because of that, you have to then reposition yourself. Sure. So that, again, you're constantly taking advantage of what is available to you. Something that was available 2 or 3 years ago may have already expired, but new things are available now to you, and you have to now capture those. Or an event in your life, maybe the tax law has not changed, but some events in your life have changed. So now we have to make modifications to that plan because now there have been certain events in your life that that changed. So based on that, we have to make modifications.
Yeah, absolutely. So we tapped in a little bit about the life insurance or other, risk, risk management or asset protection type of thing. So just to dig in a little bit more on that area before we go on to discussing other stuff, and just so we can stay within the time frame. So from a life insurance or other insurance options that we may offer, I think sometimes there's a confusion between, well, if you're saying to me that I need to have a life insurance or whatever, aren't you getting paid by the insurance company already? So there's a question that I'm sure a lot of people ask, and I want us to be able to clear that up. Let's do that now, just so they feel comfortable that when they're paying for tax planning and maybe possibly they don't have life insurance, and we offer them, then, and not offer them, like explain to them they should do that as part of their planning process, that they realize that there's a difference here. We are not agents, correct? So
Yeah.
yes.
No, that's a great point, and something that needs to clarification. Now, I can only speak about us in here, how we operate in our process. Now,
Yes.
I know that there's also CPAs out there that might have a license for insurances, investments. Some CPAs are in addition
Got it.
to CPAs, they are also investment advisors, and therefore they could also earn some commissions. Now, it is also their responsibility to disclose that upfront to the client.
You just said that, yes.
It's their responsibility to let you know that I will be earning some commissions in the process.
Right.
Now, our role, Alisa, the way that we operate more a fiduciary, we do not get commissions. We have relationships with people that we recommend, because we have developed alliances in the areas of legal and investment, insurance. Yes, we have those alliances to facilitate the process for our clients. But we are not in any way telling you have to use these people. I mean, we recommend them because there's already that synergy.
Absolutely.
We basically know, we understand each other, we understand the processes, so it will become more efficient for you. Now, we do not get commissions or shared revenues. Each one is independent. The attorney is independent from us, and the investment advisor, and that's why each one is his own profession. Most of the financial advisors that we work with are also fiduciary, meaning that they will also charge their own fees. And that's separate from the tax plan. The tax plan is, in essence, a strategy that when we're putting the attorney, the insurance agent, the financial advisor into the picture, that those elements are going to be the most tax advantageous for you, are going to accomplish your goal that you're trying to accomplish in life as far as your asset protection and so on, but the most tax advantageous for you. And that's where the tax plan comes into play. And we highly recommend is to coordinate this with your attorneys and your financial advisors and insurance agents, because it's important that it's not like disjointed. You mean all these decisions
right.
And then nothing is being, or at least not. I shouldn't say nothing, but you're not getting the most advantageous process. So the idea is to bring everybody together in coming up. The way I look, at least in the way that we approach it, we're basically kind of the quarterback. You know what I mean? There's different players, but we're in essence coordinating certain moves that are in the end are going to have, because all of these moves that you're going to make are going to have tax consequences. That's why we coordinate it in a way that's going to be tax advantageous for the client.
Right, exactly. So instead of, for example, the client talking to the insurance person separately and the attorney separately, the estate person, instead of being disconnected, when it's coming the strategy from a tax planning perspective, we kind of are guiding them through the right process. It's just a matter of talking to the right people and just getting that implemented.
Correct. And it's not, I guess you can look at it, for example, when you go to a general practitioner, the medical field. You go to that doctor has already probably done a lot of testing on you, have requested certain labs. He probably analyzed some issues in your health, and now it's going to recommend you to go to certain, let's say, a cardiologist.
Right.
That coordination is what we're doing. We're gathering this information. We already have enough information about you that we could even meet with your attorneys, your financial advisor, and communicate with them in a way that is efficient also. Because at times, listen, not all of us understand the language, the jargon that we use. So what we can do, and we do for our clients, is we also can communicate with the bankers, with the investors, because we understand their language and we can communicate with them efficient. We can communicate what is in your head and the goals that you want. We can communicate that, listen, this is what he or she wants. We'll, and if you want us to be part of the meetings, we can go with you and help you communicate that message. So it becomes exactly what you want. So, but going back to what you're saying about the commissions, no, and again, in our case, we do not get paid commissions. So I want to get that, clear. Now, does not mean that, again, I mentioned there's other CPAs out there, and they're responsible to disclose that to you.
Yes, Absolutely, absolutely. So, other than life insurance, from a perspective, like what type of insurances that we might recommend, any other insurances that you would think business owners should have that would help them out? And again, not from an insurance. We're not insurance agents, but I'm just saying from a tax strategy, what other insurances should they have in their
Yeah,
business?
yeah, and that's a it is there's a wide range of different type of insurances out there.
Yes.
Obviously, you're gonna go from the term, for example, which is a very common life insurance because it's just the protection of life. Now, what we try to do is tax advantageous process. If you have, for example, take the case of an individual that has maxed out the what he or she can put into an IRA, for example,
Hmm.
and I want to continue. What else can I do, Marie, to defer some because otherwise, if I don't, it's going to be exposed to additional taxes. How can I, build up more assets that I can tax defer? Well, you can put something like in a whole life, for example,
Got it.
and I can put assets in there that I can tax defer, and not only that, I can, that cash value, I still have access to that. Those are that strategy you see wealthy people doing. You know what I mean? And how is it that we talked last week about Elon Musk and how people are hating on the guy. And again, I mentioned last time, and I would say again, don't hate on him. It just figure out what he's doing
Yeah.
because it's available to all of us. I mean, even the individual earning $50,000 a year has tax strategies for him or for her. You know what I mean? It just might be a little bit different compared to the individual that is maybe in a $500,000 or $5 million. So you know what I mean? There's different strategies, but it's still your responsibility to see, okay, Marie, what do I have available? I make $50,000 a year. What can I do to lower my taxes?
Right. Definitely.
And that's what they do. The Elon Musk of this world, that's what they do, the Jeff Bezos. And even, you and I have talked about our friend Cardone. You know what I mean? He has his strategies. You know what I mean? And so it's just different levels, different individuals that you hear names and you see, oh, so-and-so paid, 10% in taxes. How can it be? He's a trillionaire. Yes,
Right.
because part of that is that wealth is not all in the bank account. What he did,
Exactly.
he buys strategies. He has it in real estate. He has it in life insurances. He has it in stocks. And guess what? None of that is taxable. You know what I mean? So what he's doing is accumulating assets. Remember, last week I told you that capital assets is the wealthy's friend. The wealthy
Yes.
capital assets is their friend. Why? Because I can create all these different pools. I still have access. I can borrow against those assets.
Of
And
course.
that borrowing is, tax is not taxable event. But I'm not gonna go and bore you with all of this. But these are the kind of things that we can do for our client, and we do for our clients. In that process of diagnosis, and then study what vehicles are available to you depending on your circumstances, based on what life cycle you're in at this moment, in developing strategies that you can maximize your deductions.
Yeah, absolutely. And then so some of the other strategies, and I don't know if we'll have a time to completely talk about it, but we can start the conversation is, you mentioned retirement plans from the IRA or any other ones, because, for example, some people may have a 401k at, with their employer, but then they may have a side gig, as a self-employed individual, or they just made the switch and they really don't know what to do. And, from a tax planning perspective, what are some of the options they might have to go into a retirement, retirement plan setup?
Yeah, when it comes to the topic of plans, there is different types of program. Again, most of the people are not aware that in addition to the IRA, which is very common, people, but there's, for example, non-qualified plans available. Now, again, when we're trying to develop strategies, it's not only about the tax deduction. Yes, some of these plans you cannot deduct the contributions, like an IRA. But if you already maxed out your level of income, listen, even if you were able to put money into that, you cannot deduct it because your income is so high.
Right.
So you're wasting your time. You know what I mean? So when I hear this kind of advice, it's like, Joe put money there, but he's not going to benefit.
Right.
So, and also the amount that they can put is limited. Now that tool is available for somebody else that can maximize.
Yes.
But there's a different, there's a SERP, supplemental executive retirement plan. A lot of people don't know about that. You know what I mean? There's a SERP plan that you can use for it's a deferred compensation structure plan, and allows you to stash another set of monies that you cannot put into, you already maxed out your 401k, you cannot put money into your IRA. Well, there's for example, a SERP. And then again, we can go on, and we don't have
Right.
but just to let you know that there's other
What's available. Yeah.
and I think that's at least the awareness I wanted to at least, that you and I wanted to bring to the listener, is that there is tools out there that most likely you're not aware of. And, I'm not here to poo-poo on other CPAs, but listen, a lot of them are not prepared for this. You and I have taken a different approach
Yes.
in our careers. I mean, we're more about consultative, and we can collaborate with other CPAs if they want to be what I call more transactional CPAs. The transactional CPA that does the bookkeeping and is very good at the debits and credits. You know what I mean?
Yes.
And there's the transactional tax preparer, and I tell people tax preparation is not tax planning. Very good at tax preparation. It will make the return very accurate, and we need those people, and they're great. And
Absolutely.
You know what I mean? But you're not necessarily getting tax plan from that. And most likely is that this individual is very good at getting your tax return done on time, but it's possible that they're not getting you the all of the tools that you have available.
Yeah, and especially because especially from a business side of things, there could be financial projections. For example, in one of our clients, I'm working on the financial projections where the business is going, and that type of projections is what we could use towards the tax planning side and saying, okay, now the tax planning is not for just now, that right now this year. It's about when are we planning? How is this going to happen next year and the year before? So it's a forward-looking, to at least 2 years out. So absolutely. So, but it looks like we're done with our, about the 30-minute segment, and I know there's a lot more we want to cover within the tax planning key areas that we take into consideration. So we'll leave that for next week. So those of you who've been watching us, thank you so much for being here. Don't forget to subscribe to our YouTube channels, Facebook and LinkedIn, and we will see you next Thursday, 10 a.m. live.
Very good.
Have a wonderful day.
Take care.